Hello everyone, in the first part of this series, we talked about how to determine short and long candles, and we said that these candles are used for shorts, while these are used for long. We also said that the color of the candles does not matter, and all that matters is the closing level of the candles, compared to the HEMA level. We also reviewed an easy example of the short position, and we explained how to put it signal lines. As for today's video, we will talk about three things. The first one is entering into buying positions, second, set a stop loss, third, determine profit levels. Well, since this area contains several long candles, let's choose one of them and let it be the red one here because it's easy to understand, then we'll see more complex candles. As in the shorts, we put a horizontal line on the retracement bar indicator. As for the second signal line, there is a slight difference, we have to place it on the upper wick of the candle, not on the lower wick as we did with the short candles. After placing the signal lines, we go ahead and put the timelines. And finally, this area here will be our trading area. Now let's change the frame from 1 week to 1 hour so that we can see the entry levels. This line here will be the first signal line, and this line will be the second signal line, as we explained in the first part. Now we wait for the candle to reach the vertical line in order to place pending orders. At this moment we activate the signals, as we said, we can activate the two signals or activate the signal that we see approaching the candles only. Well, here the entry is activated and somewhere here, several targets have been achieved. Here the second entry order has been activated. And here, and also here, some targets or perhaps all of them, have been achieved. Well, I think you see that some entry points have been repeated many times, but don't rush, we will get to this point and we will talk about it as well. After our trading area is finished, let's go back to the weekly chart to move forward in understanding new things. After we talked about one of the simple long candles, let's take this candle here and talk about stopping loss, taking profit and setting targets. We always start by placing signal lines and timelines, so let's do this quickly to shorten the video. After setting the lines and defining the trading area, we move to 1 hour frame. We wait for the first candle to reach the trading line, then we activate the entry orders. Here the first order was activated and some targets were also achieved. Here the second entry order has been activated, but as you can see, it looks like we lost the trade. Here too, the price went up a bit and then it went back down. The important question is, did we really lose trading at this point here and this one as well? To find out the answer, let's go back from the beginning before we get to activating the signals. First, we must know that the distance from this line to this line is the distance of the total profit of the first signal, which is the signal of the lower line. And when we calculate it using the measuring tool, we will extract the numeric value of this distance, which as we see here is 7.31%. So let's type this number on the chart. Now to find out the profit distance for the second signal line, which is this upper line, we will do a calculation. We take the profit number of the first signal and then divide it by 1.25. And the result we get will be the distance to take the profit of the second signal line. So let's take the measuring tool and measure the distance from the second signal line until we reach the percentage we got, which is 5.84. Then mark it with another horizontal line. I always prefer typing levels, taking profit, stop loss, and so on to facilitate the trading process. Now let's go back to the first profit level in order to extract the stop loss. We take this number, put it in the calculator, and divide it by 1.5. And the result will be the stop loss of the first signal, which is 4.87%. Now we take the long position tool and place it according to the results we obtained. Now that we have set the total level of the take profit and we also set the level of the stop loss, we move forward to set the profit levels, which are TP1, TP2, 3 and others. And to do this, let's take the Fibonacci tool from here. To put the Fibonacci tool there are two things. First, we must start from the signal line and continue upward until we reach the total profit line, which is the same as the second signal line. Now, as you can see, we have 6 levels and each of these levels is called TP. Well, the second thing we should know is adjusting Fibonacci levels. These are the levels we used. You can save it or take a screenshot to be able to use or test them. As an initial stage and to secure part of the profit, we used 6 levels and we will talk later about how to choose less or more levels, but let's move forward step by step. Okay, now that we have set the stop loss and set the take profit levels, let's run now so we can watch the activation of the signal. Now here, at the signal line, the entry signal has been activated. But let's zoom in a bit so we can see clear. Well, here we entered by using a pending order as we explained in the first part. At the first Fibonacci level, we took part of the profits, which is called TP1. At the second level here, we took another part of the profits, which is called TP2. And when we calculate it with the measurement tool, we get a profit of about 2%, and this is of course, without using any leverage. Well, let's go ahead and see what happens. Now as you can see, there are many targets that have been achieved, and we can also say the famous Telegram sentence, all the targets have been achieved. Well, here with all the targets achieved, what else do we see? We see that the entry into the second signal line has also been activated. So let's delete all the previous lines and levels and put the new ones. Since this line is the second entry line, and since we extracted the highest profit level previously, let's now extract the stop loss level. As we did before, we divide the highest take profit level by 1.5. And this number here will be the stop loss level. Once again, we take the long position tool and adjust it according to the results we obtained. Let's also go back a little before the candle that entered the signal. Now let's put the Fibonacci levels that we set earlier. And as we said, these levels will be the ones that will represent take profit, 1, 2, and others. After preparing the chart, let's run it and see what happens. Well, here at this candle, the entry was triggered and at the same time, the first target was hit. So let's take the measuring tool to see the profit rate. The profit rate was about 0.80 and also without adding the financial leverage. Well, let's go ahead and see the next moves. Now we see a pullback in the price, which was very close to the stop loss. After that, we see that the price has risen again, hitting the first and second targets. Well, here lies the dark side of this method. In most of the trades, the signal will hit the first and second targets, but with this high winning rate, and in case we do not reach all the targets, the stop loss will considered large compared to taking the profit, and to fix this problem, we must learn in the next parts how to move the stop loss according to some simple conditions. Well, I do not want to prolong you more than that, but wait for the next part. I know the road is long, but the steps are steady. Finally, thanks for watching and don't forget to subscribe. Good luck.